Welcome to the 10th anniversary of REIMAGINE 2021. Presented by Mousebelt. Coming up next.
Welcome back to Reimagine. Here still in the 10th iteration, so many amazing interviews, so much fantastic content at, what seems like to so many, and I guess time will tell, but feels like a sort of tipping point, in crypto markets, in the blockchain world as a whole, where, we need to see if all this hype and buzz that saw through the end of 2020 and the first half of 2021, that saw markets skyrocket, that saw so much interest, so much hype, if this will continue into the sort of new world we're heading into, whether that be a post-COVID or a new wave of COVID, whatever it might be, whether, the crypto markets really do develop in this new way. In line with that conversation and in thinking about, developments in the market and what's coming through and what we need to see, we obviously love to talk with those entrepreneurs, those innovators, those thinkers that are developing products to help mature this ecosystem, to bring the plumbing into play that makes this ecosystem to the next level and takes crypto into the mainstream, bringing those next 1 billion people on board, something that so many people we speak to are eager to do. So without further ado, I'm going to introduce our guest for this segment. That's Mark Lamb, CEO of CoinFlex. Mark, firstly, thanks so much for being with us.
Yeah, absolutely. It's a pleasure to be here talking with you guys all. We're just really excited about, we've got lots of products we're building, lots of products we've launched, and we're excited to move crypto forward. So it's great to be able to talk about that today.
Absolutely, always a favorite topic of mine. All right, so then let's start basic and work our way up here. Mark, for those in our listeners who aren't familiar with CoinFlex, who haven't necessarily come across you guys too much in the day-to-day, give us the summary, give us the overarching action, and maybe some of the latest products that you guys have been working on and putting out there.
Yeah, absolutely. So CoinFlex is a derivatives exchange. CoinFlex is a crypto exchange, spot exchange as well. And ultimately, our vision is that passive investors that are not trading on exchanges every day, passive investors can have just as big of an impact on the liquidity of crypto derivatives as the most active high frequency traders and day traders and retail traders. And so this is, most derivatives exchanges are focused sort of on people that are looking to apply a lot of leverage, and those types of participants. We're very interested in bringing in what we call the passive capital effectively, into I'm just going to flip that around. Yeah, into the derivatives game. And one of the main ways and the most intuitive ways we've done this is with a stablecoin we call Flex USD. And so if you look at Tether, USDC, these are basically stable coins that take in dollars, and the profit model for them is to lend out those dollars at some sort of an interest rate, buying different fixed income securities. The downside of that is, one, the customer doesn't get any of that interest rate. There's no shared interest model. And then the other downside is those dollars effectively go to work in the traditional finance system. So they don't end up making crypto markets more efficient. They don't end up improving the quality of the depth of crypto markets, and they could. And so what we've created is a contract and a market that is a very short-term borrow-lend market, and it's what we call a repo market. And it allows you to put in collateral, Bitcoin, ETH, BCH, any sort of cryptocurrency, and borrow dollars and borrow USDC primarily. And you can borrow it for 1 hour increments, so you can borrow it for 30 days, a year, or 2 hours. You can borrow for as long as you want or as short as you want. And the borrow actually results from our futures. So it is literally tied to our futures markets, and the more the more dollars that are deployed to it, the lower the premiums and the lower the funding rates, the cost of holding a long position on our futures markets are. And long story short, all this stuff is happening transparently in a market, but the end result is that you, the holder of stablecoins, collect 90% of the interest generated from our repo market. So, and the liquidity that FlexUSD is providing in our repo market. And so FlexUSD is this very simple product. You can mint as much as you want with one USDC. You can redeem as much as you want with one USDC. It's very simple, very straightforward. And it pays interest every 8 hours on the blockchain to everyone that holds it. So if you hold one FlexUSD in your MetaMask, you're getting interest. And the powerful thing about this is in DeFi, in trading, you can be trading your capital, you can be holding stablecoins, you can be using stablecoins to trade or to lend or to stake or to earn these forms of yield, and also be earning yield from the stablecoin itself, from FlexUSD itself. And the biggest thing is, it makes crypto markets more efficient, because all of a sudden there's this kind of base rate of return that everyone's getting in holding assets in crypto. And so, and also it puts the money, the dollars underlying it all to work in the crypto ecosystem, because why should traditional financial commercial paper markets get more dollars as a result of all the hard work that all the crypto entrepreneurs are doing, instead of people trading crypto, should get these kind of reduced, lowered costs of capital,
Right, absolutely. And I really think you hit on that wider point there of, bringing that money back into what is a hugely growing market, the stablecoin market. I mean, Tether is now worth, there's over $62 billion of Tether. I think USDC is around just hovering under the $30 billion mark. These are some of the biggest players in the crypto world as it stands right now. And you're exactly right. That money is funneling straight back into, those traditional markets and not necessarily being obliged in any way, shape or form to help bolster crypto markets.
These are some of the biggest players in the financial world, Tether and the other stable coins. They're now some of the biggest kind of short-term dollar instruments out there. And so, why give it back to traditional finance when we can help it improve crypto? So that's one of the products we created. Another one, and the downside of that product is, obviously, if you're a bull, a long-term holder, a ETH bull, a BTC bull, a BCH bull, whatever, why hold stable coins, right? You want to hold your money in ETH. You want to be long, you want to own exposure to the actual asset that's driving all this stuff,
For sure.
So that's the downside of FlexUSD, and that's where we really created this AMM Plus product. So the AMM Plus is a way to earn yield on your crypto as well. You can earn yield on USDC too with AMM Plus, but most people actually have been using it to earn yield on crypto. So this is sort of a concept that's been popularized in DeFi, where Uniswap and many of the other DeFi decentralized exchanges, DEXs, came up with this concept of automated market making. And now billions of dollars have been deployed into automated market making. And automated market making is really a very, very simple market making formula that doesn't do anything. Its beauty and elegance is in its simplicity. The reason why the majority of the world doesn't run market making systems is because most of them are very complicated and have tail risks and require monitoring and policing. Automated market makers systems are very, very simple. So they make market making accessible to the next generation. And I'll talk more about that later, but the high level is on CoinFlex, you can take your BTC, your ETH, your crypto assets, deploy them into strategies that buy the dip and sell out on the way up. You can deploy them into strategies where they might sell out of your Bitcoin over time, or they might pick a range and they might trade a lot within that range. And I think the most popular one, as you would kind of expect with the crypto crowd, is, I've been in this industry for almost 10 years now. Everyone knows that, it's kind of a generally upward trend over the long time frames. And so the most popular strategy has been a buy only strategy, where what happens is you put your Bitcoin in, you have some leverage on it, maybe 1x leverage on it, and as if Bitcoin goes down or if Bitcoin goes within a certain range, you're buying more exposure, so you're levering up on your BTC, and you might get some liquidation price as a result of that, but usually people are running these with 1x leverage, so their liquidation price is could be 70 or 80% below the current market price. Right. So if you want to take some of your assets and put them into a strategy where you'll only lose the asset if it goes down 70-80%, this is a great tool for people to actually earn a yield on crypto. And it's not there are a lot of solutions to earn yield on crypto right now. A lot of companies have raised money with interest paid on BTC, but most of them are black boxes in terms of what's actually being done with your money. The cool thing about our AMM is it's DeFi in terms of the level of transparency that's included in it. So if you go to our AMM, you start using it, you'll see that you can see every trade that happens. You can see every order that that is being placed with your capital. You can see all the positions. Everything is there, and we've created a very simple interface, so you don't have to pay attention to all the deep underpinnings. But for those who want that level of transparency, it's really important and really superior to all these kind of platforms that are just effectively black boxes.
Well, I mean, and you mentioned the issue with the CeFi, the centralized finance space, and that they are these black boxes, and not really sure what's going on behind the scenes, and so often it's paying into a system, hoping you get your percentage out, and hoping that no one's secretly running off with the money, Mount Gox style, or whatever's going on. Things have improved a little since then, hopefully, but still, at the end of the day, those are the basic concerns. But on the flip side of that, of course, there's also issues, with, I guess we can now call traditional automated market making in the DeFi space. Things like front running or other activities that go on that are problematic. Now, you can talk about how you guys address some of those elements.
Yeah. So the front running concept, just for those who are not aware, is basically one of the things about a blockchain is when you submit a transaction to a blockchain, it's not immediate that it ends up happening. And so that transaction might say something like, I want to buy some of this, let's say it's an ETH USDC pair, I want to buy some ETH. Someone can see that transaction and say, oh, actually, there's no limit price associated with this transaction. So it's just saying, he wants to buy some ETH. Okay, well, let's see, there's an interesting thing. Maybe we can buy ETH before this guy and then sell it to him. And especially if you're a miner, you can actually do that with a very high degree of certainty that you will front run that guy and profit from his order in a nearly riskless way, or even a riskless way, you could say. And so this is what we call miner extractable value. And this is one problem. The other problem is gas. But there are a number of problems with blockchains that are actually solved by order books. So we're really big fans of most of the concept and most of the powers of DeFi, and we're working on decentralizing our exchange. We've got a whole plan around decentralized custody and a whole number of things. But at the end of the day, centralized order books are extremely powerful tools for price matching, price discovery, and trading. And so even if we decentralize the custody, which is the plan, we do want to keep the order matching and trading and order book side of things centralized, because one of the things that matters most for users that are staking assets and providing liquidity into automated market maker systems is capital efficiency. So yeah, I mean, capital efficiency is basically just the velocity of your capital. And if there's no miner extractable value, if there's no front running, if there's no gas, and because of the power of leverage and cross collateralization, being able to use Bitcoin to buy more Bitcoin rather than having to use stable coins to buy that Bitcoin, you get to be long the whole time. You're long spot and you're long, the futures contracts. So it's that level of capital efficiency is why the volumes are so much higher on our DEX per dollar deposited than Uniswap and the others.
And I mean, talking about, you mentioned that there is a slew of people out there, companies offering various exchange products and offering yield farming and offering a whole lot of products out there. Now, I mean, I certainly don't think we're hitting the same sort of hype and scammy sort of qualities of the 2017-18 bull run, but here in the 2020-2021 bull run, things, if it still is indeed a bull run, but anyway, that's a different question. But things are certainly at that point where there's a lot of new products entering the market. There's a lot of claims being made, a lot of, you can get a 1,000% yield, a crazy yield amounts on all sorts of products. How is it that users, I guess, can distinguish clearly the good from the bad, the wheat from the chaff, the usable from the dangerous? I mean, I guess your answer might be just stick with CoinFlex, but in a more nuanced sense, how would you consider that issue?
No, I mean, obviously, I love our business and what we do, but I think the biggest thing users have to do when exploring DeFi tokens, projects, exchanges is really look at the ranking systems, look at the rating systems, look at all the CoinGeckos of this world and all these other places. And talk to people that are experts and listen to podcasts, consume as much information as you can. The powerful thing about crypto is that it is a global environment where anyone can innovate. And so when you have a global environment where anyone can innovate, you will have lots of projects and lots of systems that are fundamentally broken or even scams. But you'll also have all sorts of really great things that make markets more efficient and make the world a better place to live in. And so the best way to figure this out is talk to lots of people that are around you, get the opinions of experts from YouTube and articles you can read online. Go to Reddit. Reddit is always a great forum because it's relatively vote-based and they've got a lot of systems to kind of prevent different types of manipulation. And then the biggest thing is try it out with a small amount of capital, because one of the problems with traditional finance, there are some high-end brokerage platforms that cost $10,000, minimum deposits $10,000. There are some systems where you have to be a millionaire to even use the platform. The powerful thing about crypto is most exchanges, you can deposit $10 and start playing around. Most DeFi systems are kind of like that too. Obviously, you have a gas problem again, where sometimes gas can crowd out the smaller participants. And I think Smart BCH is going to be a powerful thing to solve that from a gas perspective. But CoinFlex as well. Like, you can try out the AMM with a very small amount of money and get going. And so all of these things, I think the biggest thing is, talk to people, consume information online. And then the other extremely powerful thing is get involved in the community. We have a Telegram group, thousands of people in it. We've got, various places you can engage with us. And in most cases, you can, on most DeFi apps and most exchanges, you can talk directly with people that work for the company, even senior people, CEOs, etc., and get a sense of like, oh, does this guy actually care about me? Do these people, are they really engaged? Are they just trying to pump their token and they don't actually know anything of substance? Or when I ask technical questions, are they responding with care and diligence and intelligence and interest? And so I think it's possible to get an extremely high level of comfort, but the flip side is you do have to do the work. You can generally trust if it's a regulated brokerage system in America, they're probably not going to run off with your money. But at the same time, they might charge you an arm and a leg and not do any interesting, innovative products. Here you have a bit more risk, but the upside is way higher. And the ability to experiment with small amounts of capital and talk directly and interface directly to the teams is infinitely better than traditional finance.
No, and I think you've hit the nail on the head there, particularly that that small amounts of capital idea, you know, that just getting in, dipping your toes in the water. It's very accessible. You can give it a try. And some things, you know, it's that comfort, as you say, you know, getting used to utilizing certain systems, getting used to, you know, understanding that, you know, you can get written off, your transaction get written off by a brutal gas fee, and, you know, it's not going to make it through, and that's going to make your gains, you know, not worthwhile. And that, you know, these elements can be tricky and limiting, but in the same sense, don't have to be high risk. You don't have to start putting your life savings straight into the first product you come across.
Exactly. Yeah.
Yeah, and you know, I mean, I suppose this leads to my next point, thinking about the wider market as a whole, because, you know, and it's been interesting. This is the 10th iteration of this conference. We started way back in May of was it March of 2020? I'm forgetting my dates now, but all the way back in 2020 at the start of COVID, and things were, you know, all looked doom and gloom, and then we had the great hype run up, and here we are now at this inflection point where markets, you know, there's a lot of optimism. You know, as of the time of filming, we've got Bitcoin back above 40K. You know, there's a lot of sort of excitement that maybe the pullback is over and the bull run's going to kick back off again, and we're going to see all new all-time highs all over again. But ultimately, I think people are a little unsure, and this, I think, plays out a lot in like lending markets, in these sort of you know, liquidity pools and yield markets. As someone on the inside of that, what are you seeing in terms of sentiment and in terms of sort of user confidence?
Yeah, I think BTC at any price above 20K is a bull market. I've sort of held that view ever since we crossed that hurdle. So I think you know, there's a lot of people that look at, oh my gosh, we're down 5%, we're up 7%, we're down 2%. No. Step back, hold on. The market cap of crypto is over $1 trillion. The market cap of the monetary supply is about $100 trillion. So we've crossed the 1% threshold, and crypto is now effectively competing on a global monetary scale in the world of traditional currencies. It's now a large player. It's a force to be reckoned with, and it's something that people have to think very seriously about. And the powerful thing is it's not uniform. It doesn't look like one thing. So, you know, there's so many cryptos that all have a chance of winning this fight, and I think if we were in a situation where we were purely being judged by fundamental adoption metrics, like how much crypto has been adopted as a means of payment, or usage in real world transactions or commerce, maybe you could make a case that crypto is overvalued. But we're not in that world. We're in a world where the Fed is printing large amounts of money. There's stimulus. There's COVID controls, which get people you know, in their houses, not able to do things, and interested in speculating. And in a world where there's all this, you know, kind of printing of money, and you know, very low to zero to even negative rates, speculation is an extremely reasonable course of action. And so if you think about crypto as there's a percentage of it that's fundamentals, and then there's a percentage of it that's speculative, it makes sense that in this kind of Fed-driven macro environment, the percentage that would be speculative would increase, and that the amount of risk capital that goes into this market just grows. And so I think there's this weird, a lot of people that I speak to in the industry and you know, in the space, are kind of very, very aware of, okay, in 2013 we had a big run up to around April and May, followed by a cooling off period, followed by end of the year kind of climax around November, December. 2017, same thing happened again.
Right.
And I think a lot of people are really wondering, is 2021 going to be just a direct mirror of these previous cycles? Maybe with, you know, with some new things happening, like the newer cryptocurrencies coming out, or you know, some cryptocurrencies replacing BTC or these types of things. But at the end of the day, is the crypto market generally going to have a similar type of end of the year sort of bull run. And I think there's, if you think about financial markets as a fundamentally human phenomenon, um, and ultimately, people have memories. They look at charts. They think about memes. They're mimetic in nature. It's very possible that history repeats itself simply because it's history, and it doesn't need any other particularly good reason. But also, I think with all this regulatory actions that have been happening, you haven't seen any major coins get huge action letters, or any major exchanges have big problems or shutdowns or anything like that. So I think the regulatory environment is quite strong as well, where there's a lot of statements being made, not a lot being done yet, and we'll see. I mean, there's this bill that's being contemplated in the U.S. I think the harshest interpretation possible is that they're effectively shutting down crypto in the US, but crypto is so global and so international that I think even in the light of that, the macro environment, the macro trends still win, and people remain pretty bullish. So I think if the crypto market can be bullish in the light of aggressive US legislation, it's either a sign that crypto is largely a global phenomenon, or it's largely a sign that these macro tailwinds are just stronger than anything else. And that has me really excited,
And certainly, I feel there is, strong cause for excitement. And as you say, as much as many in the crypto community will, with perhaps legitimate cause, but cry foul that regulators have lacked clarity and sort of haven't given them a fair go. And, it's, there are onerous, regulations put in place in a number of jurisdictions. At the end of the day, as you say, there hasn't been this sort of wide scale, let's try and shut this whole thing down approach that potentially we could have seen. And realistically, maybe not at this stage, maybe now it's too big and there are too many parties involved. But, just a couple of years ago, it wouldn't have been so ludicrous to think a serious jurisdiction such as in the United States could take some pretty harsh regulatory action. But it brings me to an interesting point about what you guys are up to, because one of your stated missions and one of your goals is opening up things like futures trading for the US, and wanting to really delve deep into that US market where the regulatory ground is shifting, let's just say, for a neutral term. What's sort of your goals there? What's your emphasis in that particular jurisdiction?
Yeah, so in the US, there's something very interesting, which is there's what's called a physical delivery exemption for retail commodities. And we are the only exchange that offers physically deliverable futures, outside of another futures exchange called Backed in the US. And so physical futures mean, or deliverable futures, physical futures mean that if you want to, you can press a button on your long futures position and get Bitcoin or ETH or whatever. And so this is really powerful, because if there's a wide discrepancy between futures prices and you want to short a futures contract and get delivery and arbitrage, close that gap out, deliverable futures are the only market where you can do that with instant kind of profit. But also, if you wanted to go into the futures market, establish a very large position, and then effectively turn that into spot, make it your assets that you take off the exchange, you can do that as well. So spot, holding your own keys, have always been a very, very important part of crypto's ethos. Being able to take delivery and hold your own keys is ultimately one of the most powerful things about crypto, because it means that crypto prices, markets, fundamentals, and asset ownership will never be fully in the hands of centralized custodians, and that is very empowering for the owners of the asset themselves. And so the ability to be like, well, I'm going to go into the futures market, buy a large position, and then decide, actually, I would like to own my own keys and just take this futures position and take it off the exchange and make it a spot position and do that. And we're the only exchange that you can do that on. And the CFTC actually has an exemption around deliverable futures as long as the delivery is within 28 days. So we are very interested in, and this is not something we've launched yet, but we're very interested in launching CoinFlex's futures to America, because America is ultimately the biggest market of speculators in the world, or at least maybe the second biggest, but definitely number one or number two, depending on how you measure it. And so it's a very exciting market for us. It's not one we're able to touch right now. It's one we're very interested in touching. And so I think taking advantage of the fact that we do delivery and the fact that there is this exemption is very important. It comes with a lot of kind of regulatory groundwork and legal work, and also technical work to comply with these types of rules and frameworks and exemptions. But if we can manage to do it, and this is what we are striving towards, it will open up a lot of new futures traders, and really a country that doesn't have very good access to futures markets.
And do you see a jurisdiction, just while we're sort of still on that idea of best practice, do you see a jurisdiction that is sort of employing what you'd call a best practice model to their crypto sort of assets and trading? I mean, there's examples out there, certainly, particularly in smaller jurisdictions, that will sort of allow more crypto access. In latest times, Portugal has become a famous site for those who want to get low tax or effectively no tax rates on their crypto assets. But do you think there's one that's actually really leading the game in terms of their approach to crypto regulation, and that you would like to see modeled more by different jurisdictions?
Nope, no one's figured it out.
I like your candor. I like your candor.
Yeah, happy to be honest with you. I think there are a lot of it's a bit of a aggressive answer, but I think there are a lot of jurisdictions that are trying. Seychelles has made a name for itself in being the home of a lot of futures exchanges, and we're certainly based there jurisdictionally. Singapore, I think, has pretty good attitude, is kind of trying to do things. I think no one has really figured it out, and there's a huge market. Any country that wants to figure it out and can manage to do so in a way that works well, it's a great way to increase your GDP by, in some cases, double or triple or 10x, and it's a great way to increase your taxes collected and all sorts of metrics. So I do hope that someone manages to do so, but I think it's a very difficult thing as well, because if you look at traditional financial markets, the regulation is very fragmented. And so we saw this. I used to live in London and knew a lot of the traditional derivatives trading space there. And you saw this even with MiFID, which was a derivatives regulation in Europe, and the CFTC. So the US regulatory body is the CFTC. The European one is ESMA, and created this thing called MiFID. So many long acronyms. The end problem is the CFTC and MiFID regulations conflicted with each other. And so even in traditional finance, regulatory compliance is often impossible to get it 100% right. And you often have these weird conflicts and international problems, jurisdictional problems. And so a lot of banks and hedge funds end up incorporating in Cayman or incorporating offshore, for similar reasons to why crypto exchanges incorporate offshore. So I think the answer is probably going to come from the offshore world, similar to how it does in large swaths of the financial system. But I think the challenge is in which jurisdiction, even in that world, has the manpower, has the English language talent, and the skills to create this type of framework, because it's obviously extremely complicated at this point.
Yeah, certainly, no doubt, extremely complicated, and the will to get it done correctly, I suppose, is also a key point there. But you never know, maybe El Salvador will get it right. They're making moves, so we could all be based out of El Salvador soon.
Yeah, exactly.
Absolutely.
We might all have to move there. Yeah.
Exactly. All right. Well, Mark, I mean, I could sit and chat with you about the ins and outs of regulatory policy internationally all day, but unfortunately, we're going to have to start to reach a conclusion here. But before I do, I mean, I always like to give our guests sort of a last word, a bit of a. I like to focus a little forward looking, you know, sort of seeing what's coming down the line, both for CoinFlex, but also if you've got any views on the matter where, markets are heading, and I don't mean numbers, I'm not interested in that, but, sort of where trends are heading, big things that you see pitched on the horizon, sort of ultimate goals, anything like that you have in the sort of forward looking direction. Would love to hear it.
Yeah, absolutely. So the thing that I've been thinking a lot about in the last 2 weeks is the fact that at one point, the only way to get exposure to the stock market was to pick individual stocks. And one of the things that popularized the stock market itself and investing really was the S&P 500 and other index fund ETFs and mutual funds and index funds. And they took something that was a manual, time-intensive job of looking in the newspaper or looking in various things and picking what to invest in and then executing those trades and paying all those commissions. They took this kind of complex, time-intensive, money-intensive thing, and they made it democratized. They made it accessible to anyone with the with a phone call or eventually the click of a button. And now it's extremely simple and very low cost. The cost of some of these index funds is extremely low, and that empowered a whole generation of investors to do something which was brain dead simple but extremely profitable in the long run. And I think, and it's a specific type of investing and a specific type of trading, which is rebalancing based on the market caps of stocks. And I think we can do the same thing in terms of the same type of financial impact and same type of trillions of dollars moved in automated market making. Right now, market making is similar to stock picking 100 years ago. Not many people are market makers. It's a profession. It's not a casual passive investment stream. It's something that in any financial center there might be a few thousand people that are doing it only, and in the whole world maybe there's 200,000 people that aren't market makers. Maybe it's more than that, but it's a very small percentage of Earth, a tiny fraction, way less than 1%, probably less than 1% of 1%. And why couldn't it be 10%? Why couldn't it be 20%? Why couldn't 20% of the world have 20% of their assets in market making systems? Brain dead, simple, stupid ones that just do exactly what you expect and just work. And I think that could change the nature of liquidity in crypto assets forever. Because one of the big problems, crypto is very volatile. And this is a reason to stay away from it. People are like, oh no, but you love the volatility. That's how you make money. Well, okay, sure, that's great. But that doesn't make it a good currency. And that is how you make money. But if we want to go from $1 trillion invested in crypto to 50 trillion, 100 trillion, 300 trillion, the way to get there is really to deepen the liquidity, lower the volatility, mature the market. And so I do think these types of automated market maker systems, hopefully CoinFlex's system leads the charge in that sense, but in general, as an asset class, are going to take over a large swath of the world's capital. And the act of doing so will drastically increase the price of crypto, but also increase the liquidity and dampen the volatility. And it's going to change the game forever, because it will really make trading financial assets very different. You'll be competing as a market maker. You'll be competing with a group of people that in aggregate have way more money than you. So I think it's going to be really interesting. I think that is probably one of the least understood concepts that's come out of DeFi and is about to change the nature of financial markets.
Wow, it's certainly a powerful vision you painted there, and a true sort of, I won't use the word revolutionary, but let's say evolutionary development in the way markets function and operate within our society. Mark, I want to thank you so much for taking the time to speak with us. It's been an absolute pleasure. So much good covered there. And to everyone watching, make sure you stick with Reimagine. So many more amazing interviews still to come.